Let's check in on oil prices with a veteran observer of the industry. He spent many years working in the energy sector as well. We're joined by Andy Lipow, president of Lipow Oil Associates. Thanks very much for joining us.
Thanks very much for having me, Andrew.
There's so many topics, but just can we get your outlook on oil prices? You think, Andy, a year from now, it's likely oil will be about $10 higher, but you know that there's going to be swings along the way.
Well, certainly we saw last year crude oil trade between roughly $65 a barrel and $95 a barrel. So a year is still a long way off. Mm-hmm. What we do know is on the supply side, we have a significant amount of increased production coming from the United States, Canada, Brazil, and Guyana. And of course, matched up against that is world oil demand increasing, which the International Energy Agency projects to be only about 1.2 million barrels a day. But we have a lot of geopolitical events that can be happening between now and the end of the year. And the one thing that I'm focused on is we're seeing more and more drone attacks by the Ukrainians on Russian oil infrastructure, and ultimately that could impact on oil supplies to the market.
Yeah, actually understated it. You say that oil could be 12, maybe even more dollars higher. Why is that, Andy? I presume part of that is you think OPEC Plus will stick to its production restraint.
Well, I think OPEC Plus really has no choice but to continue with their voluntary production cuts. And I could make the case that they would continue with that throughout the balance of 2024, because these lower oil prices of about $73 for WTI is simply not enough to satisfy their domestic spending budgets. I do not think that we're going to see Saudi Arabia flood the oil market as they had in years past, because if I just think about that country in and of itself, the population has grown from about 10 million people in 1985 to over 36 million people today.
Wow.
And they simply need the revenues for the domestic spending. And that's one of the changes that we are seeing over the decades, is that population growth is forcing additional social spending.
That's incredible. Just the high birth rate pushing it up. I guess they have a huge expat population too in Saudi.
Well, that is really exclusive of the expat, but it really is to the needs of the exploding population growth on a domestic basis. But we have seen Saudi Arabia does have grand plans actually to get away from oil and spend more money on infrastructure and diversification. So you can kind of see where they're really not in a position to flood the market with oil and say see $40 or $50 a barrel. I would argue a little revenue deficit is better than a really great big deficit.
We're tight for time, and I'm sorry, but you have the presidential election coming up this year, and you say the price of gasoline is a big issue with U.S. voters. So part of that might be the administration may go soft on sanctions on Iran and Venezuela?
Well, we've really seen them turning a blind eye, especially on Iran, as Iran has increased their exports and production. They're headed towards 3.5 million barrels a day. You know, you can see it every day. Gasoline prices are a pocketbook issue, really combined with all the other inflation impacts that we're seeing this year. And the American consumer is not feeling good about inflation. Rates are coming down, but the price at the store still remains very high, and this has become an election year issue.